This is your host, Sovit Manjani, CMT. I'm thrilled to welcome you all to the episode number 8 of Trading Head series. Today's discussion will focus on long-term market analysis and investing, understanding how markets move in cycles and how different sectors take turns as leading and lagging sectors. The real edge for any serious investor lies in recognizing these rotations before they become obvious to the crowd. In this session, we will decode the Indian equity market's outlook through the powerful framework of sector rotation and relative rotation graph, that is RRG, tools that help visualize how momentum shifts across sectors over time. Joining us today is Mr. Smit Radia, founder of RevvaStone Financial Advisors LLP. Smith has worked as technical analyst for over 7 years and as a professional trader for the past 2 years. He has cleared CMT level 3 and brings expertise across wealth management, investing, and trading. Together, we'll explore which sector is emerging as the next market leader. Has the auto sector already peaked out? And what do RRGs reveal about the broader market structure and future leadership trends? So ready as for a data-driven, insight-rich discussion which blends technical precision with practical investing perspectives. So let's dive in. Over to you, Smith. Hi, Smith.
Hi, sir. Good evening.
Good evening, Smith.
Uh, I thank you everyone for joining today, and I thank you Sovit sir. He has been a mentor to me for past few years, and I thank him for everything he has taught to me in my journey. So today we'll dive deep into the world of Indian equity markets and learn more about how to analyze sector analysis in an efficient way and in an easy way, right? So I'll share my presentation so we can start with it. So, yeah, is my screen visible, sir?
Yes, now it's visible.
No, thank you. So, hi everyone. My name is Smit Ketan Radia. I'm founder of RevvaStone Financial Advisors LLP, and I have cleared CMT level 3 in this June 2025. And today we'll know more about RRG and how to use it effectively and find stocks that are in a better shape to generate better returns. In start, we'll know about global snapshot and then we'll proceed ahead. So in this current scenario, there is US China trade war going on. There are a lot of trade inflows and outflows within the economies. War in different countries, which is causing geopolitical tensions, which has increased the overall volatility on global scale. Central banks are trying to balance between inflation and economic growth. So the impact on India is due to higher yield in the US markets, there is a lot of outflows from the Indian economy, but it has survived somehow in such chaos due to domestic institutional buying and institutional support. Somehow Nifty index has been is surviving about 25,000 levels, which is a good sign and a healthy scenario. RBI also is maintaining repo rates to effectively maintain this economic scalability. And there are upcoming events which are going to affect Indian economy, which is implementation of GST 2.0, which has made ease of doing business and which has also impacted overall economic scenarios in India. There are also negotiations going between the US and India for ease of sanctions and normalizing the trade. Next, we are going to know about equity global indexes. So over here, I'm trying to explain that current economic scenario of Indian markets with other global economies. So we have US, Japan, India, China, and UK. From last September, India peaked out in September, and then it was in a range. After that, US and Japan took the lead, and China was able to recover from the lows of October. And now we'll study about Indian equity markets with using RRG with Nifty 500 as a benchmark. Why I've choose Nifty 500 benchmark is we want to analyze a sector not based on just 10 to 15 stocks leading the index. We want an overall market breadth which helps us to analyze the practical scenarios in the market, which can be not which is not manipulated easily, right? So before using RRG, I'll guide you through what exactly RRG is. RRG is relative rotation graph, which was made by Julius de Campner. He made a tool to make sector rotation analysis very easy. It was a very tedious and lengthy process to analyze which sector is outperforming compared to others. He made a tool so simple that just by observing this chart, we can identify which sector is outperforming at the current scenario and which sectors we are supposed to avoid, right? So, with the help of these four quadrants, we have one leading quadrant shaded in light green. Next, we have weakening quadrant in yellow, lagging in light pink, and improving in purple. So there is a rotation, there is a cycle that rotates through the chart that help us to identify the sectors. So this is how the cycle works. A stock from leading quadrant moves to weakening, weakening to lagging, and lagging to improving. So for better and simple understanding, I've written outperforming in the leading quadrant. So as to understand a sector in this leading quadrant is to be focused on, right? So this is the market outlook for Indian equity markets. So as per this chart, we can see that Nifty Financial Services, Nifty Bank, Nifty Metal, Nifty Private Banks, they are the leaders as per current market scenario. So this is a monthly RRG chart, right? So this has a long-term effect on the charts. So we can see Nifty Auto, Nifty PSU Bank heading towards the northeast direction, which they show a early recovery in the coming sessions. We can see metals are rising fast in momentum, IT, energy, and oil remaining into the lagging quadrant. Nifty reality is one of the sectors we are supposed to avoid to a good extent. Stock specific movements can be expected, but overall, we are supposed to avoid that stocks and focus on the sectors and stocks which are in a better shape and better probability. Now we'll study more about sector comparison in a weekly chart. Over here, we can see Nifty Auto, Nifty Metal, and Nifty PSU Bank are in a great shape, followed by Nifty Commodities and Nifty Health Index. Nifty Healthcare Index is facing towards the weakening quadrant, showing uh, underperformance, which can be expected. So we can focus on other sectors which are more in a healthy condition. And for simple and better understanding, if we get confused in RRG or to confirm our analysis on the RRG chart, I have used a simple sector chart to compare as per their returns. So I have used a 1 year returns chart so as to understand which sector has performed Nifty 500. So we can see from the lows of 2025 February, Nifty India Index has outperformed each and every sector, which was followed by PSU banks, Nifty Finance, Bank Nifty, private banks, metal, auto, healthcare, right? So it is easy to identify which stock is already in a better shape. So we can identify stocks in those sectors which can help us generate better returns. Now we'll deep dive into individual sector and analyze the stocks within that sectors using candlestick charts and RRG. Why we are using candlestick charts and RRG? So as to confirm our analysis on a bigger time frame. What we analyze on the RRG chart will confirm it with the candlestick chart so as to have a better idea and avoid entering at a wrong prices. Sectors in focus. So as per the analysis, we are selecting these 5 sectors: Nifty Auto, Metal, PSU banks, private banks, and FMCG. But we'll focus FMCG later. We'll focus on 4 sectors: Auto, Metal, and PSU and private banks. Metal stocks, we have overview of the stocks including in the indices. So we have five stocks in a better shape. We can see JSW Steel, Hindalco, Tata Steel, APL Apollo, Jindal Steel, which are facing towards the northeast are already in a better position compared to other stocks. We can see NMDC, Hindustan Zinc, Hind Copper, Adani Enterprise, they are in a lagging quadrant, which shows us easily that we are supposed to be avoiding the stocks and focusing on the stocks that are near to leading quadrant or within the leading quadrant. So we'll select a stock Jindal Steel. So Jindal Steel, we can see on the chart that it crossed its lifetime high in early 2024 and is consolidating near that highs. RSI is also supporting the same scenario. RS, this the right chart, right column over here signifies relative strength. This is the relative strength of 21 months to better qualify, to better analyze the qualified stock. So over here we have used 21, 55 and 233 EMA, which can give us better trend idea. And using RSI of 21 months and given a zone, the gray zone is a consolidation zone, which can help us identify where the stock is placed as according to the RSI and which is momentum in a simpler language. Over here, we see that Jindal Steel is above and consolidating, which gives us a better opportunity. Whenever it crosses above its near resistance, we can expect a good rally over here. As well as it is also within the leading quadrant, which also supports our confirmation over here. Next is Tata Steel. Tata Steel is slowly forming a base as well as in the RSI and also is slightly above the zero zone, which confirms that it is positive and has the capability of giving a new rally in the coming sessions. So we can use RRG and use candlestick chart to combine and filter out the stocks which has better probability compared to others. So it eases our process and clears the idea and gives us a better risk reward returns. Next is Hindalco Industries. Even Hindalco Industries is at a resistance near its previous high. Even RSI is confirming that. And using RS over here, it also shows that it has good relative strength and good momentum, which also can be seen on the RRG chart. So this is how we identify and invest into stocks that can generate a long-term return. So over here, when we analyze such stocks, we can analyze. See, if we take example of Hindalco Industries, so the 21 moving average is around 657 levels. So we can invest into a stock, invest into Hindalco when it comes near 657 or 660, or we can enter into this stock when it crosses above 772, which is its high, and keep a stop loss below 657. And we can expect a better return for a longer period, which is safe and steady, which avoids the noise or give us better opportunities and stable returns during chaos and higher volatility. This is how we filter out better and simpler stocks to stay invested and generate stable and steady returns. Then we'll focus more on PSU banks. So these are the stocks within the PSU bank indices, right? Over here we see Indian Bank, Union Bank, Bandhan Bank. Sorry, not Bandhan Bank, Union Bank, and yeah, Bank of Baroda, Bank of India in improving and leading quadrant. Out of which Indian Bank and Union Bank are in a better shape, right? So we'll focus on those stocks who are into better shape and avoiding Central Bank, UCO Bank, Punjab National Bank. So we'll avoid those stocks and focus on stocks which are in a better position. So over here
Excuse
we
me,
are
sir.
analyzing. Hello.
Excuse me, sir. Excuse me, sir.
Yeah.
Sir, this PSU bank, the chart, sir, I don't understand. What, sir? This one?
Yeah.
This one. Yes, sir.
So
Yes, sir.
yeah. So this is the RRG chart of PSU banks. So the stocks included in this chart are components of PSU banks based. So PSU bank is an index. It is derived by performance of all these stocks shown in this chart, right? So out of those 12 stocks, we can identify few stocks which are into better shape.
Okay, sir. Thank you.
Yeah. So over here we can see Indian Bank. So over here it is in a very good shape. It has crossed its prior high in early 2024, and again it consolidated and gave a breakout in 2025. We can see even RSI is in a overbought zone, and RS is positive, but still it is at a high. There is no such rule that a stock cannot go above 70 or cannot go above 80. It can stay above 70 till it wants, right? So we can consider the stock in a better shape and stay invested into the stocks. We can reduce our risk reward and take safe bets by going on a weekly chart and finding a better entry into this. Union Bank of India. Union Bank of India is into a zone. It is not yet able to cross its prior highs and it is in a consolidation phase near its highs. The RSI is showing support above its gray zone, which is a good sign, a healthy sign, and it is also coming above its 233 days average, right? So it shows that it has the capability of going ahead, and it is into a good quadrant. So it also confirms us our analysis that it has possibility and it has a good risk to reward ratio. Or if you think that this is not an ideal position, we want to take more safer bet, we can enter above the breakout, which is near 180, and keep the stop loss below 21 months moving average. Right. Then comes Bank of India. Bank of India is one of the stocks. I personally am keeping watch on this stock since it was around 110 or so. After crossing the 120 level, it has become more interesting. It is coming out of consolidation after almost 8 to 9 years. It started falling in 2018, but the overall downtrend started way before, right? There is a conflux point over here of moving averages. Whenever there are moving averages coming together and a stock is trying to perform well, it is a good opportunity for us to enter that scenario so we can have a multi-bagger returns over here, right? So there are times we can find stocks that has capability of multiplying our wealth through such simple analysis over here. Bank of Baroda. Bank of Baroda is also in the similar shape where RSI, the momentum is strong. RS is not bad, but below zero. Since it is consolidating from 2024, we can expect it to stay in a consolidation phase. So we can expect it to be in weakening quadrant. Weakening, if there is a huge rally and stock enters into a weakening quadrant, we can expect it to stay into that consolidation phase and turn from weakening to again into leading quadrant, showing that it has resumed its prior uptrend. Even Bank of Baroda has a capability of take for a healthy bull run over here. We can see even there is a good risk reward. The stock is trading around 270, and we can place our stop loss around 240 or so. So we can get a better return from over here. Canara Bank. Canara Bank is coming near its high. It is coming after almost 13 years, which is a very long period of time. Whenever there are such breakouts, we can enter into such stock at after the breakout. If volume confirms the same, we have a multi-bagger at our hand. So this is called breakout trading or breakout investing. But since we are looking at a long-term perspective, we are using RRG and other tools, we can expect a huge rally after this. Wherever there is a huge consolidation of so many years, it has a good momentum whenever the breakout is confirmed. Now we'll look more into private banks. So this is a RRG chart of private banks, right? So we can see most of the banks are having better momentum, excluding IndusInd Bank, right? So for past 2 to 3 years, private banks were into long-term consolidation after COVID. PSU banks had a good rally, but private banks, apart from ICICI Bank, not other banks had a good opportunity to be invested in for a long-term perspective. So we'll look more into it. So we had Kotak Bank, HDFC, ICICI, Federal is facing towards weakening and lagging quadrant. We'll exclude that uh, and use other stock for analysis. We'll use RBL Bank since it had a good rally. We can see on the chart. It has a huge tail end, right? So we'll focus on such stocks which has better capability. So we have Kotak Mahindra Bank. As I mentioned, after COVID, Kotak and HDFC entered into a long-term consolidations, and now the charts are showing signs of a new base forming, and they are ready for a new up move. Momentum is showing a healthy sign, and RS is slowly and steady coming up. So 21 months relative strength confirming the view shows us that the stock has capability of long-term bull trend. So we can enter into such stocks and have a better wealth creation from this point. This is HDFC. HDFC also entered into a slowly and steady consolidation, but is tilted to a bullish side, right? So it was between 680 to 900 for a quite a long time, for almost 2 to 2.5 years, and then it break out about it, and now it is trading about 1,000, right? So we can find such stocks, filter such stocks, and stay invested for a longer period. That creates wealth, right? Next comes ICICI Bank. Out of private banks, ICICI Bank was one of the stock which was able to generate twice the return. It multiplied almost by two for just in just 4 to 5 years and generated wealth for investors. We can see over here it outperformed the major index, and it has now forming negative divergence, right? We can see in the RSI. RSI is not making a new top, but the price is. So this is called a simple negative divergence. So we can see and analyze that if the stock is not able to cross its high, right? So we can avoid investing into ICICI Bank and focus more on Kotak and HDFC. Rather than taking a risky bet, we can place our money into safe and steady stock. Next is RBL Bank. RBL Bank in COVID crashed almost more than 60-70% over here and stayed within that range. After 4 years, it started trending again, and now it is finally coming above its highs near 2024, which is 290 to 310, right? And we can see that momentum is finally now supporting the stock and also trying to outperform the market by a good margin. Though it is still below zero, but we can expect a good rally when it breaks its resistance supported by volume. So even this is a good stock. We can invest a small portion of our portfolio so as to avoid major exposure to a risky bet, right? Now we'll focus more on auto sector. We can see this is the RRZ chart which we saw earlier in the starting of the session. Over here we can see the dark yellow shadow, right? It is facing upwards towards the leading quadrant, right? So it is a quality of a stock which has been through a long-term bull trend, and there was a correction or a consolidation in between. Now it is ready for a new up bullish rally. So it is trying to enter into leading quadrant again, right? So for traders and investors who look for such setups, auto sector is one of the candidate. But we'll analyze it further that is it safe to enter into auto sector stocks or not. So over here we can see on weekly time frame, auto sector is already into the leading quadrant, right? So it is better for coming few weeks, but for months we'll analyze it further. Are the stocks supporting the sector strength or not? So this is the chart of Nifty index, auto index, right? So we can see it is at resistance. It is also in formation of negative divergence, but has not yet completed, right? It is showing outperformance, it is showing momentum, but will it consolidate or will it give a new breakout? This is the weekly chart, and we can see again that even weekly chart is showing some sort of weakness and consolidation over here, we can expect it to take support near moving averages and then again test the new highs and give us a breakout for coming sessions. So this is chart of Maruti. So this is a wonderful chart. During COVID, it went below 4,500 and stayed within the range till 2023. After the changes they made into their systems, the stock started outperforming, and in 2024 it gave breakout about 10,500 and started a new rally. Within 1.5 years, it is already 16,000, which is more than 60% returns, which is fantastic. We can see over here momentum already gave us early signs, and overall index was into the leading quadrant there, which helps us to understand that this stock is already into a sector which is leader in overall market. So this is how we filter step by step to understand which stock to invest in current scenarios. Ashok Leyland is also one of the stock which is above its current previous highs and currently has given a fresh breakout. So we can understand that there are two stocks giving new breakouts, and we'll analyze further that will they support the sector breakout or not. Over here, momentum is supporting the trend. RS is above zero, which is supporting the overall uh, analysis that this has a good probability that it will continue to outperform the market. Next is 𝐢𝐼SHARE Motors. 𝐢𝐼SHARE Motors has been in a good, healthy, and steady bull run since 2022. We can see it has created healthy returns from 3,900 to 6,900. Right. So these are the kind of stocks we can filter out during the process. So even still, the RS is positive and rising. Even momentum is positive and rising. Price is also rising. So we can expect the stock to outperform, but we can the entry point for such stock is to go to a lower time frame and find a genuine support over here, and then we can enter into such stocks and enjoy the rally that is coming ahead. Next is MRF. So we can see MRF is coming out of its previous high, which was almost a period of 2 years. It is a strong stock since the momentum is within the range and RS is strong. We can expect MRF to rise again. Right. TVS Motors is another stock where it has given a fresh breakout, though there is a possibility of negative divergence, but it has not yet confirmed the same. RS is positive, showcasing outperformance of the market, and momentum is still healthy. It is not yet weak. It is still in the healthy zone, right? So we can expect the outperformance to continue, but it is risky at this very point to enter. We can go to a lower time frame, analyze a better support, and then enter into such stock. Right. So the question arises: is Nifty Auto peaked out, or will it give a breakout? So we saw few stocks. All of them are either above their resistance or at their resistance. Right. So Nifty Auto Index is at major resistance on both the charts and giving a sign of negative divergences. For a long-term trend, such scenarios are like a small correction, like a hiccup, right? For a long-term investor, it doesn't matter that it is in a negative divergence. What matters is when it breakouts again, they will enter into it at the stock in their portfolio and get benefit of the new rally that is expected, right? And if this stays into positive scenario, the sector will instantly turn into the leading sector and give us more confirmation and stability on our portfolio. So this also signifies that most of the stocks are signaling negative divergence that reduces the chances of an immediate bull run, right? So we can expect Nifty Auto to enter into a consolidation or give a fresh breakout, right? So conclusion is auto has not yet decisively peaked, but at a risk of correction or consolidation in a high in a uh, sorry in a high range, and caution is advised until fresh momentum emerges. Right. So over the session, we saw different scenarios and different sectors to simplify the analysis using RRG and normal candlestick charts. So why we use both these different charts is technical analysis is a very subjective study, right? It changes as per the scenarios. It changes as per the individual as well. So what we do is we try to confirm our analysis using different tools, keeping it simple and using confirmations as a backup. So despite all the global wars and global volatility, we can find such simple and steady stocks which are better and safe to invest in and take the benefit of the upcoming rally. From the charts given above, we can analyze that auto sectors, metal, private banks, and PSU banks have better probability to outperform compared to other sectors, right? So if we find that auto sector is not yet ready to outperform immediately, we can focus more on private banks and metals. So we are at such a crossroad. Leading sec, uh, leading sectors are running through resistances, and momentum is showing early signs of, especially in auto sector, right? So we can skip those stocks and focus on the stocks that are strong. So it's a
Yeah, Smith.
yeah. So this was from my side.
Yeah.
We can ask for questions.
Yeah, I think there's a question from Pratik Mehta. He's asking, since you are seeing in monthly time frame, can we
Hmm.
reduce it to weekly or daily?
Yes, absolutely. We can reduce it to even a day, but it all matters that what exactly you are trying to achieve using those charts. If you are looking for long-term investing, right? If you are looking for long-term investing, you have to change your time frame to higher time frames, right? If you want to trade for a take a trade for 3 to 6 months, you can go to weekly chart, right? If you want to take a trade for a month or a 3 month, you can also take advantage of daily charts. But as you go lower, the volatility increases, right? So you should decide what volatility can suit your system, and then decide what time frame to use.
Perfect. Okay. Abhijit asking, we can see find RG chart. Where can we see RG charts with? So what software you are using for these RRG charts?
I'm using Strike Money.
Strike
There are a
Money.
lot of softwares, yeah, but I was Strike Money was a bit friendly for me to use.
Okay. So what's the website?
Strike Money, STRIK. Let me take you to the
Okay.
site if possible.
So it's like what's the cost of it? Any idea?
It is nearly around 5,000 to 6,000 per year.
Oh yeah, that's it. Okay.
So this is the name for, yeah, you can see over here, I guess.
Okay. This is from Rohit Srivastava, right?
Yeah.
Got it.
Any other questions, sir?
Yeah. What are MAS in chart?
So,
MAS moving
okay.
averages.
Yeah. So I'm a follower of
Okay.
Fibonacci. So I tend to keep my systems relating to it. So I use 21, 55, and 233 number, right? So if it is daily chart, it is 233 days. If it is monthly chart, it is 233 months. So as we can see,
Perfect.
so it is for a longer view. For that reason, I'm using a longer averages. If we want to trade for a shorter term, I use 20, 55, and 144. I reduce the longer term time moving average.
Okay, got it. Someone is asking, do we get allergy charts on TradingView? I don't think it's there in TradingView. It's in Strike, which Smith has told you. Yeah. And are the stop loss and target also will then the stop loss and target will also increase, right? In monthly charts, right? Smith?
Yeah. So there is a simple explanation for that is, so when we focus more on longer term view, so we expect more than 30%, 50%, a possible multi-bagger as well, right? So when we expect such returns, we need to also accept a higher percentage of loss. So if we aim for 10%, we have to risk 3 to 4% of the capital, right? If we are aiming for
Right.
more than 50% returns, so we have to simultaneously also increase the risk appetite as well. So if we aim for 50, you need to at least accept a loss of 15-20%. Am I right, sir?
Right, right. As you increase your time frame, your losses will increase. But then for that purpose, you can have diversification, right? Where
Okay, we can
you
use.
can have 30 to 40, 50 stocks in your portfolio, so that even if few stocks go down and give you big losses, there are other stocks which are making money for you.
Yes.
Okay. How much is the cost? I think Smith said it's around 5,000 rupees for the Strike software. Okay. You're skinny stocks after technical analysis. Smith, are you skinny
Sir,
stocks after technical analysis?
I did not get the question, sir.
Swapnil, basically, these all tools which Smith is showing are technical analysis, are using technical. RRG is a part of technical analysis. Your
Yes,
candlesticks
yes,
is a
yes.
part of technical analysis. Your moving average are part of technical analysis. Fibonacci numbers are part of technical analysis. Everything here, if you see, is technical analysis,
Yeah.
right?
So these are all based on statistical and data-based visual representation, right? So it is all based on numbers. So it is just technical analysis. It is a different perspective of analyzing the data.
Okay. There's a question, how you decide stop loss based on that? Means for monthly charts, right?
Okay. So, sir, I generally prefer to keep the stop loss below the 21 moving average, right? So, as well, our stop loss is wide enough, right? So, I try to keep it simple, and it is already statistically proven that during when the period, the 21 moving averages, you know, uh, plays a role of support and resistance in both the trends, upside and downside, right? So it helps us to get out early, right? To reduce our
So,
exit.
okay, so you're using 21 monthly moving average, right? So, with 21 monthly, obviously your risk will be high, but your returns will also be high because you will get multi-baggers because 21 will not be hit easily. But if it
Easily.
is hit, your losses will be bigger. Kunal is asking, Smith, since not everyone is using or paying for the subscription, is there any other way to do it manually?
Actually, I tried doing it manually in the Excel, but was not successful completely. It showed me a single stock, but it showed error. The effectiveness was, there was a spread between the actual value and the value I derived in Excel, right? So it is better to use a software until and unless you derive, something better for yourself.
And I think RRG code or the exact formula is not publicly in the market, right?
Yes, 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 yes. I still tried somehow using some different variation, but was not yet successful.
Okay, so you'll have to use some software. There are three, four software which provide RRG. Strike is one of them, right?
Yeah.
And it's not very expensive. 5,000 per month, per year is not a very
So yeah,
high
yeah, that's
price.
very user friendly. So this is for a year, which makes somewhat 525 per month, which is okay. We can afford it.
Right. Okay. And we are not directly connected with Strike, right? So we are not
I am
working
not
for them.
anywhere
Yeah,
associated with Strike or TradingView. So I generally use this software for my personal analysis. So I'm using that those same software for the session.
right. Vijay is asking, do you decide on the entry's time frame on of holding? How many months is general the rollover issue, if any? You are buying it in cash market, right? So there's no
Yeah.
rollover issue.
So, yeah. So if we use monthly charts, I don't think using futures is a ideal instrument because the
Right,
volatility will be way higher than it can be accepted. For using
correct.
futures, we
Yes,
have to use daily and weekly chart, majorly daily chart for
correct.
futures.
Yeah, in future, if you are doing that, maybe you'll have to go to below daily also because futures you are using leverage 5x, 3x leverage. So monthly charts you'll get very big drawdowns in futures. You won't be able to survive in futures if you
The drawdown
use
will
monthly
increase by
charts.
30-fold.
Yeah, correct. Yeah. Um, and how you decide the entries, I think that is what Smith showed you, right? He showed you the RRG chart, he showed you the candlestick chart, he showed you moving averages, right? So what was that? That was basically entry, right? Yeah.
Yeah,
And time frame he's already told you monthly he's using, right?
yeah. So for
Uh,
the
can we use
entry
RRG? Sorry.
pointer, we can use weekly chart,
Yeah,
which
if
can
you
get,
want to go to low time frame, weekly can be used, or even daily can be used, right?
yeah.
Can we use RRG beyond Nifty 500, like Nifty small cap 250 or Nifty mid cap 250? Is it recommended?
Yeah. So as of now, the software only offers option between Nifty 50 and Nifty 500, right?
Okay.
So yes, we can
Because
use
that is the limitation of the software, right?
so we can use individual sectors for comparison. When we are comparing stocks within Nifty Bank, Nifty Bank, we can use Nifty Bank as a benchmark. Or here you can see.
Right.
So there is a marginal difference if you change the benchmark, but it is always suggested to use a higher benchmark to simplify the analysis and also get a better idea.
Got it. Okay.
So
Ideally, you
for
prefer stock in purple zone for long and green zone for shorting?
Uh, sir, I actually prefer if a stock has been into an improving quadrant for 3 to 4 months and is showing a better base or a formation in the candlestick chart. So I can take a bet on those stocks.
Okay, so basically you prefer purple, right?
Yes.
And
So
shorting for shorting, what do you recommend?
for shorting stocks, I don't use RRG because since I'm more focused on long term, I use RRG for that purpose. For shorting, I've never tried RRG for that matter. I just avoid those stocks that are into lagging quadrant. But it can be
Okay.
used. It is used by many other traders for shorting as well. But I personally have never tried that.
Okay. Right. But I don't think green zone is good for shorting, as per my understanding, because
Yeah.
although green is leading, it may remain in leading quadrant for a very long time, and the prices can continue to go higher. So you can have a big losses in shorting if you
Yes.
try to short in leading quadrant, as per my understanding. Smith, what do you have to say on that?
No, sir, that is actually very true. A stock can stay into leading quadrant, and it is not necessary if a stock is entering into weakening quadrant will compulsory or mandatorily we go to the lagging quadrant. It can also turn back to the leading quadrant, right? So
Right.
if a stock has entered into a correction or a consolidation, the stock will turn from leading to weakening, right? And it can stay there for a time. And after the consolidation phase is over, it will again turn back to the leading quadrant to resume its original
Correct.
bull run.
Right. And also understand, Pratik, that shorting, if you are not professional, shorting is not recommended because in shorting, your losses can be unlimited, right? Uh, because if the stock starts to go up, it can double and triple also. And so if you do not have risk management, shorting can be very, very dangerous.
Yes.
Okay.
Shorting
So
increase
we don't
the
recommend
overall drawdown.
shorting for, yeah. Sorry.
Yeah.
Yeah, Pratik, sorry, Sumit, you were saying something?
No, I was just agreeing to your point that the drawdown when it comes to shorts, it also increases. If a uh, long strategy has a drawdown of 10%, the short one will have at least 15 or 18% because the volatility is higher on the
Right,
downtrend. The whipsaws are
right,
very
right.
high, can take a stop loss and go back down. So it is not advisable to use RRG or higher time frames like monthly or weekly for shorting. If you are taking a positional trade for 3 to 6 months, you can use weekly chart for using futures. But still, it is very risky, and you need to plan it out very well.
Right. Okay. Shivanand is asking, in these upper quadrants, there are multiple arrows. If arrows are sideways, like left to right, in upper quadrant, what does that show us?
Okay, so let me explain you a simple point, a derived indicator of RRG, which is called angle and direction, right? So if the arrow is pointing towards the upper corner of leading quadrant, right? So it has a higher momentum, that it has a better capacity to run towards that corner, right? So it has the highest score value over there. So it shows highest momentum along with highest relative strength, right? So it shows a better outperformer among the group of stocks that are already outperforming and that has better possibility. Right. A stock facing towards the weakening quadrant shows that the stock has, the pace of stock going up has reduced. So it can enter into a consolidation soon, or it will again rise to the upper corner of the leading quadrant.
Okay. Uh, Uh, Kunal is saying, so sorry, just realized we already discussed this on Discord. I even tried it myself and trading you. Okay. Uh, how to select the time frame in RRG, like when we should analyze monthly, quarterly? Mohit is
So
asking. So,
it comes back again to the view, what you are trying to, what sort of trade or investment you are trying to achieve from the analysis, right? So if you want to do long-term investing, you have to change the time frame from weekly to monthly or quarterly also, right? So if I want to invest into a stock that has a long-term capacity, right? So I will focus on the quarterly chart and monthly chart, right? If I want to enter into a stock, just take a small trade, I will use daily and monthly chart.
okay, fine. Uh, something look Something to look and test. Yeah. Okay, so we do not short, but we reduce our position. Yeah, that you can do. But that also you have to test, like you'll have to have some observation, some experience, right? Because with my experience, I don't use much of RRG, but I will not mind holding on to the position which are in leading. Yeah.
Yes,
Risk
very true, sir.
management part of discipline rate, yeah, that is correct. Okay, or plan to exit holding if not shorting, or plan for exit. I would not exit in leading, as I said, right? I don't like to do that. Okay, because yeah, we can see past history in this Smith.
Yes, sir. We
Suppose
for 5 years.
say it can
So we just play
how
a
much? 5
small.
years? Yeah, 5 years is more than enough.
Yeah, so I'll just
So
play a
any
small.
sector which has done very well in the last 5 years, you can show like defense is there.
Yes, let me show you, sir. I'll show you the whole area. I'll select the sectors by one.
say any sector which is done very well in last 5 years or last 4 years, say last 1 year, nothing has gone well. But before that, which sectors were doing good, right? I think defense
Real
was
estate
doing
was
good.
actually one of the outperformers. Recently, it
Which
has
one?
entered into consolidation.
Which one?
Nifty Realty.
Yeah, so near Nifty Realty, I think you can see from say somewhere 2020, say year 2020, you can see how it has performed and how the stocks have remained in improving sector for a segment for a very long time, or leading segment for a very long time.
So I'm just playing a
You
small
can,
run of the RRG
mm,
from the past data
yeah,
so as to understand how this works actually. So
yeah.
we can see this reality. The dark one is reality. We can see it entering into the lagging and again going to the improving, then leading, then again weakening. So this is how the actual cycle works.
So if you see in leading, it is remaining for a very long time, right?
Yeah,
It remained for a very long time, and that was a good period for realty. That is what I suppose, right?
yeah. So from April
Again,
to
it is going
20,
into improving here,
it was a good time.
and then again here it went to leading,
Yeah.
and now I think we can see how it went from improving to leading, and it remains in leading for some time. From weakening, it again goes to leading, right?
Yes. So this is
It
the
remains in
actual
leading for a very long time,
correct.
again comes into weakening, again goes into leading, right? And then it phases off,
Right.
right?
So
So
this
you
is
can
a
see
tip.
it remains for a very long time in leading.
Yeah.
Right? In this, you may not be able to see it because it's in a fast motion, right?
Yes.
Uh, but in real life, it can remain in leading for many, many months also.
Yeah. So this is the typical presentation of how the RRG works, and you can use RRG at your benefit, right? So we saw reality coming into leading and entering weakening, and again going back to leading. So that showed the typical bull run correction, and again entering into a bull run, right? So not necessary
Correct.
stock entering into a weakening quadrant is ready for a short or is ready for a downtrend, right?
Right. Okay. Siba is asking why arrows are becoming large and small.
That is what I'm zooming in for a better understanding. Since there is a
Okay.
cluster, a better clarity of the flow. For that reason, I'm zooming it, zooming out.
Okay. So because you were zooming in, zooming out, that is why the arrow size was increasing and decreasing.
Yeah, yeah, yeah.
Right. And maybe what Siva is asking is that the length of the arrow, right? That is
So
also for some stocks it is small and some stocks are long. So what does
yes,
that represent?
yes. So the it is called tail, right? So
Yeah.
what shows is it connects the different points. So we are see over here we can see that counts, right? So what it shows is we are analyzing the previous four counts as well. So we are counting this week and past 4 weeks data points, right? So it is connecting all the data points together to help us understand from where sector has come from past 4 weeks, past 5 weeks, right? So if I increase
Right.
the points, so it will, increase the tail end, right? But it becomes very messy to analyze a particular stock, right? So it becomes too much. So to reduce that over analysis and confusion, so we reduce the counts to five, which help us to understand better from where a sector has come, right? From improving or from lagging or from weakening to lagging, right? So it helps us to connect all the dots together.
Well, basically, it's showing us the history, and
Yes.
in the last say say 4 weeks, if we take 4 weeks, if the movement is small, that is, if the stock has moved by say only 2-3%, then the length of this tail will be very small. But in the
Yes,
last 4 week, it has given a 20% move, then the length of the tail will be long, right?
correct.
Great.
So we can see a
So,
dark purple, right?
yeah,
So it is a very small range, right? Nifty 200
yes.
was within a very small range. And if we see Nifty metal over here, so it has a very large range, right? So it shows the journey from a point to current scenario.
Okay. Got it. And another thing, what is interesting in RRG, those who have not seen RRG, those securities which remain closer to the center point, right? That are showing that the volatility of those securities is less. And
Yeah, yeah.
right? And if
Correct.
they are far away from the center, like you can see metal is far away from the center, right? So it is showing that metal sector is very volatile.
Yes. Even Nifty Auto is very far away. We can see this. So it is very far from the center. It shows that Nifty Auto has higher volatility, not just compared to benchmark, but also compared to other sectors.
Right. So it's a very useful tool. It can tell you volatility, it can tell you momentum, it can tell you the trend, right? So what more do you want, right? One tool which gives you all the information. And it is also telling you the relative strength compared to the Nifty, which is your benchmark, right? Or Nifty or CNX, whatever you want as a benchmark, right? Okay,
That's
I can't see any other questions. If you have any other questions, you can put it down in the chat box. Otherwise, we may end the session here. So we'll wait for 1 minute. If there's no questions, then we'll end the session here.
done.
Okay. Since there are no questions, okay, there's one question here. What's your view on gold, silver, and gold,
So
Smith?
overall, sir, for past 5 years, I was advising and requesting everyone to buy physical silver as well. Those who can't trade on online using futures, I was requesting them to stay invested in silver specifically for a longer period, because it has the use of silver in industrial areas, it has increased by multifold since solar and EVs have emerged. The use of silver has increased by multifold, right? So it has a long term capacity to be used, so it is a very healthy bet for 10 years, right? So I'm very bullish. I expect it to, go about per kg of silver to go about to 2.5 also in a year or two, maybe. But that is my view. I'm very bullish biased in silver.
Okay, got it. Okay.
Excuse me, sir.
Yeah.
Sir, one question. Sir, BHL, what is
Yes.
the view, sir, actually?
Which one?
BHL.
I think Smith,
BHL.
can you?
Just a second, sir. I'll just. Just a second, sir. Sorry. Yeah. Sorry. Which stock, sir?
BHEL.
So as per the weekly chart, I would suggest strong buy above this high of 257. If there is a breakout about this level, we can surely invest into BHEL for a first target of 335. But since it is a weekly chart, it is a long-term positional trade, right? And after there is a breakout, it will be a completely altogether a new story, right? For as of now, it is a good stock to invest after 260. Even the
Sir,
momentum is started to confirm the trend. It has also RS is also showing some sort of bullishness. So we can wait for a breakout and then confirm and enter into the stock.
sir, breakout level, sir.
So the breakout level is around the high is 257.10. We can use 260 as a level for confirmation.
Sir,
This is
repeat it.
already about 260. I think it is around 270 or somewhat, right?
Sir, today is
If you see
closing
that
260.
high, that high is around 270, I suppose.
I guess there is some sort of issue. Let me just cross verify it.
That red candle which you are seeing in the top, that looks to be around 270 approximately.
Yeah, 272. Sorry, I was
Yeah,
watching
yeah. You are seeing the
70.
low.
Yeah, I mistakenly saw the low. Yeah, so
Yeah,
we
no
can
worries.
expect breakout about 275.
Okay. And there's one last question. Any view on crude? Why it's under pressure from the last few months? How you see its trend in coming months? Yeah, Raj, you can ask your question, but let him answer the first question.
Okay, thank you.
Sir, as per the momentum and averages, the stock is the crude oil is already into the pressure zone, but it is in the range bound and at the lower end of the consolidation, right? So we can expect it to stay below 7,800 for quite some time.
Okay. Now I
Okay,
have a
and you
question
have a question
regarding
on IT?
IT stock. Like IT stock is under pressure because of AI and all, and like the kind of sanctions from the US. So how do
Uh,
you look at the outlook of like IT stock, Indian IT stock? I mean, do we start investing or do we wait for more correction in this?
so see, generally, I believe price informs you before anything happens like that, right? So let's go to Nifty IT for better idea, right? So as of now, Nifty IT is giving signs of consolidation, right? So after there is a breakout about 55 average, 55 weekly average, right? Then we can think of keeping IT stocks into a watch list. So we may miss a part of a chunk of rally, right? But it is always better to take trades or invest into stocks that has a better probability, right?
Okay.
If we invest now, when it stays into consolidation for another 10 weeks, right? And we had another stocks like private banks, they gave returns of 5 to 7%. So we invested into stock that was not performing, and we had better opportunities, right? So it is always better to keep focus on stocks that are performing. Once the IT sector is strong enough to enter into a new rally, automatically the charts will show you, or the scanners, or we can see that also on the RRG chart, that Nifty IT sector has entered into improving quadrant, and now we can start focusing on the stocks coming into that sector, right?
Yeah. Okay. Thank you.
Yeah. I guess, sir, Raj had some question. I can
Yeah,
see.
Raj has already asked. I think there's a question by Siba. What tools you are using for risk management to avoid whipsaws in short-term trading?
So I use basic calculation. So if I can accept a loss of 10,000 rupees behind a stock, right? If I'm thinking about 2 to 3 months of trade, right? So I can accept only 10,000 risk of stock. I will only buy so much stock that I can accept it, right? I won't take 1,000 stocks, 1,000 shares or 2,000 shares. I will just buy 300, 400 shares in which I can accept that whipsaws, right? So market is in a scenario where volatility is already rising on individual stock basis, right? So it is always better to analyze your risk appetite. We can also use ATR for simplification of risk analysis, correct? So I can show you that over here. So over here, from the daily chart perspective, so the ATR over here is showing, let's take TCS, get a better rate. Yeah. So over here we can see that ATR for TCS is 46.71, correct? So when TCS is confirming me that it is showing that it is crossing a consolidation, right, or is filling this gap, I'll keep a stop loss of more than 46 points or also 50 points. That is one ATR, right? So this is how you can manage your risk. You can also keep ATR into two to get a better opportunity and lessen the risk of whipsaws and to get returns more than the risk, right? So over here, let's say if TCS crosses above 3,100, correct? So over here, what I'll do is I'll multiply 46.71 into 2. That is 93 minus, let's say a round figure of 3,000. If TCS crosses above 3,100, I'll keep my stop loss near 3,000 or a point below that, right? So 100 points of risk, and for the target of over here, you can say 3,300. So 200 points of trade, 100 points risk, 200 points of profit. Risk reward is 1:2. So you can
Okay.
manage it like that.
Okay. Great, Smith. I think you've answered all the questions. Okay. So thank you everyone for being part of episode number 8 of the Trading Head series. We have had an incredible session decoding how sector rotation shapes the long-term market narrative and how tools like RRG help us visualize these subtle shifts in leadership across sectors before we are they are visible to most of the participants. A big thank you to Smith Radia for sharing such clear data-backed insights on identifying sector strength, understanding where opportunities and risks are built up. If there's any takeaway from today's session, it's this: market reward participation and preparation, not prediction. The more you understand these rational forces, the better your position yourself ahead of the curve. Stay tuned for our upcoming episodes, where we will continue exploring the deeper mechanics of market behavior and the art of systematic decision making. This is Sohit Manjani and Smit Radia signing off for today. Trade with discipline, invest with perspective, and keep learning. See you all in the next session. Thanks a lot, everybody, for
Thank you, sir.
joining.
Thank you.
Thanks,
Thank
Smit.
you.
Had a wonderful session.